In news that really can't be a surprise to anyone who has a basic understanding of how math works, Sears has hired advisors to help the company prepare for bankruptcy, and shares of Sears down 35% today.
Yeah, once you dip, there's no going back. When I say dip, I mean debtor in possession, which is which is the loan they're seeking, which is a loan that it provides short-term financing. It's the most senior of debts that you get when you're in bankruptcy, just to keep the business and the lights on until everything can be sorted out. And that's what's happened to Sears. And I think, Chris, you said it's really no surprise that we're here. I think what's most surprising to me is actually how we got here, because if you step back 20 years ago, you could have said, okay, the world is changing a little bit. I can see this e-commerce thing going. I can see Walmart and Target having all their success. Sears feels a little behind. The stores are older. The catalog business isn't as strong as it used to be. Eventually, maybe this is a retailer that's not going to be around. But what happened was it had this weird sort of end to it, which is Eddie Lampert comes in, and it becomes a story of not just a retailer that's going bad, but a financial engineering story where a value investor with a great track record at the time comes in, he buys Kmart, then merges Kmart with Sears, and it becomes a real estate play. It becomes an asset play. It becomes, I can raise money, I can pay down debt, I can buy back stock, and I can create this investment vehicle that would be really successful. But it was always built on a crumbling foundation, which is the Sears business. And all of that other stuff didn't put customers back in the store. Stores, declined over time. There was no reinvestment in the core business. And I think that was ultimately what happened. And it's why we're here today with Sears essentially on the verge of bankruptcy. Yeah, the Wall Street Journal had a line today, because I think it's for people who are not looking at the news every day, the business news every day, for people who are not focused on investing every day, it's probably easy to just say, well, this is the narrative that has played out over the last 20 years, which is the rise of e-commerce and bricks and mortar going down. The line in the Journal is, the company was not helped by Mr. Lampert's unconventional approach to retailing, and pointing out that, among other things, he really resisted investing in upgrading the stores and that sort of experience. One other thing I'll throw in there with the financial engineering is the brands that Sears owned. That was part of Lampert's strategy as well, well, if we need a little bit of money, we can sell it. They sold off the tool brand that they had. And Land's End spun off. Yeah. It's kind of sad to see, but it's, again, I was saying this right before we started taping. I'm not sure what I'm more surprised by, the fact that we've been doing this show for nearly 8 years, or that we've been talking about Sears going bankrupt for nearly 8 years, and they're still in business. And I feel like that headline is just really, it's killing me, because it talks about possible bankruptcy. I mean, come on, man. This thing is imminent. Just say that they're getting everything in order to go ahead and file for bankruptcy. I mean, it's imminent. It's not possible anymore.